Hey traders, Raghee here, and in this free video we're going to talk about the day that was, the slide that we saw into the close on Options Expiration Friday. Now, Options Expiration Friday brings up a part of trading that I call endearingly pin the tail on the donkey day, the options pinning. The pinning tendency that affects us futures traders when the heavily weighted stocks of the broader averages start heading towards the strikes with the most open interest. So it's almost like a tractor beam effect that can oftentimes happen. Now, I don't necessarily think that we're always going to see a pin, but if you have a particular strike that is particularly liquid, I like to see strikes that are liquid on both sides, the put and the call side, so you know that both sides of the market are particularly interested in that strike. Pepsi was a great example. We'll talk about Pepsi here in just a moment, but why is Pepsi important when I'm looking at the Nas? Because Pepsi is one of the heavily weighted names within the NASDAQ. So take a look. Here's Pepsi. And then take a look here at a breakdown of the QQQ or the NASDAQ. All right, look at the weighting. Of course, Microsoft, Amazon, Apple. But there you go. Pepsi, heavily weighted even more so than Netflix. Right? So Pepsi's sell-off, a lot of folks were asking me, Rog, why was Pepsi selling off? Is there news? I mean, it's not earnings. What was it? And I had a theory, and I'll share it with you right now. This was recent news in Pepsi, which is to say I don't think Pepsi was moving lower on news at all. I think basically what we saw, as a lot of you probably observed today, is that Pepsi was running down towards, as you can see, its strike. All right. So one of the things to remember is that, and yes, this is a real account that actually my husband is trading. I'll show you some more deets on that in just a moment. So one of the things to remember about Pepsi's weighting is that if the NASDAQ is selling off and you have sort of a strike that is in play, this is the pin the tail on the donkey level, is there an opportunity to get long as the market sells off? Again, knowing that we're likely to, as they say, pin 130. And what is the NASDAQ's role in this? And how does Pepsi affect the NASDAQ? So you want to know what these levels are in all the heavily weighted stocks of the broader indices. Not every stock is going to have a play. Pepsi did today. There are a handful that did, but going into the third Friday of the month, it's actually really easy to do. You do that kind of research. Which individual strike with proximity to current price is heavy OI on both sides. So we actually looked to get long on Pepsi here today as the market sunk down towards the 55 EMA, sunk just below the +2 standard deviation, and basically, I believe, had an overreaction to today's news cycle, to today's pinning. Now let me show you something else here. That is the auto chartist. Here we go. PEP. What is a typical move in Pepsi? Take a look. A typical move for the day on a Friday is right around 1.7 and right about 1.9, maybe 1.85. Pepsi for a day, 68% of the time, these are going to be the moves. Take a look at today's candle here. The high was 133.19. The low was 130. There's your pin the tail on the donkey. $3.18 move. Let's go back over here for a moment. What is the typical move? On a day like today, about $1.70, $1.75, and on the upper end, about $1.80, $1.85. Is this an extreme move? Absolutely. And therefore, there's a pretty good chance, not news related, not earnings related, that it's a extreme move, that it's an exhaustive move. And then we know how the NASDAQ also contributed to that move. So what we did is we built a small position in Pepsi, remembering we might see a little bit of follow through on Monday, but there are a lot of different opportunities like this in the broader averages. Now, just to add a little bit of sanity to the panic maybe that's out there for a moment, look at the move in the NAS. We just touched the 21 EMA. Do I feel good about a NASDAQ buy or QQQ buy off the 21 EMA right around 78.20? Absolutely. That is a correction of the overall trend. We'll talk about that in the premium video a little bit more. these are going to be moves. Now, I would like to see these bullish corrections. Here's the ES correcting also to the value area low for the month and also the 21 EMA. These are moves that I'd like to see follow through, and then we can get out before July 3/1. So I do have a date-related eject button. Want to be out before the FOMC because I think this meeting is going to be bananas. We have so many messages, so much expectation growing for a 50 basis point cut versus 25. My gosh, there's so much to have to process. We'll talk a lot about that stuff in the premium video. And also, one of the things that I want to start emphasizing more here, gang, and I think this is so important, is when you are tracking your trades, gang, one of the biggest mistakes I see traders make again and again and again is they're trying to go for big winners. They're trying to knock the ball out of the park every single time they step up to the plate. And again, I've been using my husband as a really good example, as he has just started to learn how to trade about 8 weeks ago. He's got a live account now for about 6 weeks, and I have been publicly sharing his account and everything else because I think it's really important for people to see that if you're going for those, getting on base, hitting a single, hitting a double, it's not sexy. I'm not going to be able to talk about a 200, 500, 1,000% winner, but at the end of 6 weeks, his account is up 55%. It's scalable. Right? It's a scalable approach he's using. No one trade has the ability to really leave a dent on his account. His win rate, very solid. He's cherry picking opportunities. It's very stable growth starting here, and he's at about, I think, somewhere around here right now. And that's, again, since the 30th of May. Now, I love showing his example because a lot of people say, well, of course, Rog, you're going to do that. You've been doing this for 30 years. He's been doing this for 45 days. Now, granted, I'm here helping him, and I'm showing him the same things I would teach you guys. But I just want you guys to realize it is doable. But you got to study. You got to study your trades. You got to take a good hard look and analyze your trades. And so I'll be doing a lot more of this. I hope it helps because I really want you guys to realize it's not about, I got this big 1,000% winner, and then next thing you know, you're looking at your overall account and it's still down. I mean, that's not going to help you, gang. If you're still down X thousand, even though you had 1,000% trade. Right? So be careful about that. It's really boring. It's slow and steady. And think about that over the weekend. I know this video ran a little longer than I would have liked, but I'll see you in the next update.